Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast. Sorry, the Wealth Management Podcast from MPIinvest.com. So, talking about the markets have been booming, but of course, we have missed out podcast for quite some time. I was not keeping well, and then we had almost this long break because of that. So, well, talking about the markets have been at all-time high in India, no doubt about it. But then, is the rally still continuing? Because today again we're going to see a major gap up, thanks to the U.S. markets rallying like crazy yesterday, and what is happening all and what is expected is something that we'll discuss. So we did not have the market pulse video, the first market pulse video that we missed because I was not keeping well. But then let us try to cover up it all today. Now, talking about the markets, what happened last week? The markets, of course, were continuously rallying up. We reached very close to 21,500, and from there it was kind of consolidating. And if you look at yesterday for the first time, it actually just touched 21,500 and then kind of settled just below that. But then today, the markets are going to open much higher than 21,500 thanks to the major rally that went in the US. So most of the brokerages are actually saying that in the US there can be 3 to 4 rate cuts in the next 1 year, which is kind of driving amazing positivity in the US market. So what happens during this time? When the interest rate gets cut, simple thing, the home loan rates, the car loan rates, all of these interest rates come down, and that is when people will start buying these things, and that is when the sales also go up. So overall the economy goes up. So this is the positive side. Now, talking about the negative that's happening at this point of time. So all of you must be aware of what's happening with the Red Sea issue. So most of the shipping containers which are actually taking that route have been diverted via Africa, which is a longer route. Now that is going to increase the freight charges. The freight charges are going to really go high, and at this point of time that would actually mean that the oil prices are also going up, which is not good for India at this point of time. So that is one thing to be looked at. Now, when the freight charges are going up, the insurance cost and overall product charges also can go up, and now that can be again a fear for inflation going higher, especially for countries like India, which is dependent on oil imports so much that the markets are so tender on when we talk about the fuel prices. So that could be something that needs to be watched. So that tension should be kind of cleared soon. So that is something which could kind of affect the Indian market as well. So is everything looking green? Definitely not. There are some positives, but when this gap up opening happens, will that sustain is a big question. So that's something which we need to wait and watch. But then, of course, one thing is there has been a huge buying. More than 42,000 crores have been pumped in by the FIIs in India in the last few weeks, which has driven the markets up so much. But then in the last 2 days, the FIIs have not seen that, shown that encouragement. In fact, yesterday also they've sold for almost 600 crores. So that is something which is kind of making me feeling that the markets will not rally up much. And generally, let me tell you, every year the FIAs generally get inactive by the last week of the year, because they generally go on vacations for Christmas and New Year. So with that, we might see a reduced action of FIS in India. And if that happens, generally this is also a time when a lot of the market volatility can be expected. Why? Because the market would have slightly immature players, and of course that can actually drive the prices faster, and that could make the market volatile. So that is also something that could be expected in the upcoming few weeks. So we could see some changes in the market from Jan first week. So until then, for now, December is going to be a week of volatility. So that is something that could be expected for now. Let's see how the market moves. And I have personally taken some trade in the Gold Plus Club, and with this gap up, we might have one position out of the three positions into trouble. But that is okay because we've got a very good support system that we have taken yesterday, which hopefully should reduce our losses during such bad events. I mean, of course, it's good for the investors, the market goes up, but for our traders like us, huge movements are actually basically, I am a non directional trader. So a big movement towards any one direction puts us into trouble, but then we will manage that. So trading is not again a cup of tea for everyone, but then yes, it needs a wholehearted detailed passion and time dedicated to that. So that is something which I would not recommend to all of you, but then yes, as investors, uh, be there with the SIP. In fact, the new year's coming, take a resolution, start with the SIP investment. In fact, something I can tell you interestingly is ULIPs are also a great way to start investing, because the best part of ULIP is at this point of time, the way the Indian government has actually positioned it to up to 2.5 lakh investment per year gives you a return which is zero tax paid. So you don't have to pay any taxes on your returns when you invest into ULIPs more than up to 2.5 lakhs per year. So just imagine a 2.5 lakh investment per year for 5 years in a ULIP in 20 years can turn to 1 crore. That is your investment of 2.5 lakhs into 5 years, which could turn to 12.5 lakhs. That could 12.5 lakhs in 20 years can turn to about a crore. And imagine that 1 crore coming to you with zero taxes. Yes, so that's absolutely what you can have a portion allocated. Of course, I would not recommend more than 2.5 lakhs a year. Now, the best part is you can do this 2.5 lakhs as a monthly SIP or a lump sum 2.5 lakhs a year. So it's up to you. So about monthly SIP would come to about 20,800 a month. So roughly about 21,000. But then in 20 years, you make about a crore tax free is something good, right? So that's also something good if you can think of. Yes, if you want to decide which one and when to, how to invest, do connect with us. Schedule a meeting at mpiinvest.com and we will meet and discuss about your financial investment planning. So that's it for now. This is Srikanth Rajan signing off until we catch up with more details tomorrow morning. Goodbye. Have a great day. See you.